SEBI Grade A 2020, the examination whose application process just does not end. Again, it has been extended, as you know very well by now. So it has been extended to October 31st, 2020. So we cannot do much about it. Let's just go ahead into the current affairs for May 2020. And before we do that, Olive Board also creates a lot of current affairs capsules which will help you to comprehensively cover the current affairs for SEBI Grade A 2020. You can go to the link in the description and in the comments to check those out. And of course, you can also attempt their free mini mock tests which will help you with this examination. And if you need a comprehensive course for SEBI Grade A where you are going to get live classes, study notes, video lessons for each and every different subject, mock tests and all the things that you need to get success in this examination, you can check out Olive Board's SEBI Grade A 2020 online course from the link in the description and in the comments. Let's begin our video. Hi, this is Shupriyo. So let us begin with SEBI current affairs for May 2020. These current affairs, they are very important for SEBI Grade A 2020 and also for RBI Grade B 2020. So let's begin with the first one. Benchmark Indian market indices saw steepest fall in 11 years in financial year 2020. So as we have already talked about in multiple sessions that we saw a lot of fall in our market indices this year because of the pandemic situation and all the lockdown things that happened, and this was historically the steepest fall in 11 years. So just make a note of it that Sensex and Nifty, they lost 23.8% and 26.03% in financial year 2020, and the total demat accounts, it stood at 40.8 million in financial year 2020. So the exact figure is not that much important, but just understand the trend and just to keep a little bit of opinion about the total accounts that we have. And SEBI has also clarified that the fall in the Indian stock markets is lower compared to other global markets like the United States, China, Japan, Germany, France, etc. So SEBI has said that our fall, it's not that bad. So it's not something that we need to worry about too much. And also remember the SIP inflows, which is the systematic investment plan, which is the mutual fund SIPs. So many of you might also be having SIPs. So those inflows, it touched an all-time high of 8,641 crore rupees in March of 2020. So these were the important figures that we just needed to remember for all the market related things. So let's move to number 2. SEBI probes Franklin Templeton India to assess rule violation in fund closures. So as we already talked about in the last session about the Franklin Templeton issue, so I hope that you have checked it out because it was a very important thing. And the Franklin Templeton debt fund issue, the 6 funds that were actually closed, it caused a ripple effect in the mutual fund industry, and the redemptions have increased quite a lot, and this has caused a lot of damage to the mutual fund industry in India. And so SEBI, it's going to check Franklin's risk management. So that is the very important thing, because SEBI thinks that the concentration risks and all the other important things that they had to actually maintain, Franklin was not maintaining all of those things. So they want to just assess all the rule violations. So they are going to check for inaccurate income fund classification and extent of bank borrowing or bank liquidity. So these are the things that SEBI is going to check. And Franklin's US based parent company also started an inquiry. So the US based parent company, so Franklin Templeton, the headquarters of that is in USA. So they have also started an inquiry into their India division so that they can find out if any kind of wrongdoings had actually taken place. Number 3, investment banks approach SEBI to seek QIP pricing norm relaxations. Now QIP, what is this? It is qualified institutional placement. So QIP, this is a route by which the institutional investors can actually invest into a company. So the paperwork that is required in QIPs, it is quite less, and all the investments that are done, they are done through equity or equity linked instruments. So it is a kind of a way by which a company can get investment from these institutional institutional investors, they actually give all these Indian companies an easier way to gain access to institutional funds. So QIP is a very important thing, and many Indian companies use it to get funds, and it is widely used in Southeast Asia as well. So the companies, they need some flexibility in raising the funds. So the QIP pricing norms, so usually there are stringent norms that SEBI has put in place. Now the companies, due to the pandemic situation, they need more funds, and that is why they wanted some kind of flexible arrangements from SEBI. And so QIP, it is a fast track method to raise capital from institutional investors, and the investment banks, they want discount on SEBI calculated floor price. So SEBI, they actually calculate a floor price, and below this floor price you cannot offer your shares. So this is how the thing actually goes. And how is this calculated? It is the average of the high and low stock prices in the last 2 weeks. And now understand, because of this lockdown situation, because of the things that are happening, the volatility is quite high. So the average price, it will not actually allow them to understand how much the stock is actually worth. And so the investment banks, they approach SEBI, and presently the discount that is allowed on this floor price, it is 5%, right? So right now, if say that your floor price, it comes out to be rupees 100, then you can offer the share at 95 rupees. But this is actually allowed right now. But the investment banks, they want it lowered to 10%. So they want a bit more leeway, so that 10% below the floor price is also allowed. And SEBI, they have already planned to reduce the 6-month cool-off period. So what happens is that if you have a QIP, then for the next 6 months you cannot have another QIP. So that is the SEBI norm right now, and SEBI has already started plans to reduce that. So the investment banks, they want these things to be done as well, and SEBI is now looking into it. Let's move to number 4 now. SEBI eases KYC norms. So the know your customer norms, and the intermediaries, they can use DigiLocker now to verify the driving license, PAN card or the Aadhaar card. So these kinds of things, if it is allowed, then physical verification is not that much required, and that is why SEBI has eased these norms. And SEBI has encouraged them to use UIDAI authentication and the income tax department PAN database, and also the penny drop system for bank account verification. So this penny drop method, what is it? It is actually a method by which 1 rupee is deposited into your bank account and then it is again withdrawn. So by this kind of a thing, they can understand whether the bank account is operational, and it can prevent from any kind of misuse of that information. And this is how they are encouraged to actually do the KYC. And the validity of e-sign for the Aadhaar holders to digitally sign and forward documents should also be put in place. So the e-sign, it is actually used for electronic signature of the documents, and this is also very important, and SEBI has just put out the guidelines for that as well. So these are the things that SEBI has done. Let's move to number 5. Ministry of Finance allows Aadhaar authentication by 29 insurance and 9 stock market entities. So they can now accept KYC and verify it from UIDAI, the Unique Identification Authority of India. Now this thing actually allows it to do what? You do not need any physical Aadhaar verification. You can just give the number and they can just do a digital KYC, and they can just check it from the UIDAI database. So for the insurance companies, it's not that important for our current discussion, but the 9 stock market entities, you must know. So what are those 9 entities? Bombay Stock Exchange, NSE Data Analytics, National Securities Depository Limited, NSDL, the Computer Age Management Services, so CAMS as we know, CDSL Ventures, Link Intime India, Central Depository Services Limited, so CDSL, NSDL Database Management, and CAMS Investor Services. So these 9 entities are just permitted right now in the stock markets to do the Aadhaar authentication, and also 29 insurance are also there, but that's not relevant to this discussion. Let's move to item number 6. Franklin Global CEO blames SEBI for closure of 6 debt schemes. Now this was a very funny kind of an incident. So what happened? Franklin Templeton's global CEO Jennifer M. Johnson said SEBI's decision to allow mutual funds to invest only 10% in unlisted instruments was a reason for closure of those 6 debt funds that we talked about. But Franklin has later apologized. So this rule of only 10% in unlisted instruments, we talked about this in the previous current affairs, so you will be remembering that. And she said that this was the reason, that is why Franklin had to close down those 6 debt schemes. But we all know that that is not true. But what happens in the West, they have these kinds of earnings call, and in those earnings calls, what they do, they just explain to the investors what is happening with the company. So she somehow said these kinds of things, and then Franklin had to issue an unconditional apology later on, because we know that this was not a problem of SEBI, because this 10% rule, SEBI has given the companies adequate time. It has been given almost 1 year to comply with that norm, and that is why that is no reason for which the schemes have to be closed. The other mutual funds are running. So Jennifer's comments, it was certainly not warranted, and that is why Franklin had to later apologize because of this thing. And AMFI also came out in support of SEBI. So the Association of Mutual Funds of India, they came out in support of SEBI, saying SEBI only wants investor safety and protection from unlisted non-convertible debentures. So of course SEBI actually has done all of these things so that we can be protected, and this is not something on which foreign CEO should be commenting, but of course these things happen. And let's move to number 7. SEBI eases compliances for virtual AGMs during the lockdown. So right now there is no requirement of dispatching physical copies of annual reports to the investors. So physical copies won't be necessary. SEBI has exempted banks and insurance companies from filing consolidated financial results and said they can do it on voluntary basis. So the consolidated financial results, what actually happens is that because right now there has not been a uniform implementation of the indices by the different entities, so a group company might not have that kind of implementation, so it becomes a little bit difficult for the consolidated results to be made, and that is why SEBI has given some leeway in that, because in the lockdown situation nobody wants to just train those people. So let's move to number 8. SEBI scrapped fines on listed companies that are not able to meet MPS norms. So you will remember MPS, we have talked about this. It is the minimum public shareholding norms. So right now SEBI has said that there will be no fines on companies that cannot achieve minimum public shareholding of 25% between March 1 and August 31, 2020. And remember, SEBI has also told that any kind of fees, if it was deducted, then it will be refunded back to the companies, because right now the economy is going through a downturn and SEBI is trying to help these companies. Now also remember, these things are very important for the examination, that what is the penalty level. Stock exchanges levy penalty of rupees 5,000 per day on companies violating MPS and credited to their investor protection funds. So that is what is done, and if your violation it goes on for greater than 1 year, then it becomes 10,000 rupees per day. So just remember the fine levels and the amounts, it's very important. Let's move to number 9. Finance Ministry allows firms to list abroad without first needing to list in India. This is a very important thing. So it was a part of the 20 trillion rupees economic package. So you must have already read about all of those things. So it was allowed only in 10 jurisdictions, which are IOSCO plus FATF members. So what's the IOSCO? It is the International Organization of Securities Commissions, and the FATF, we know, the Financial Action Task Force. So these two entities, the jurisdictions have to be members, and they must have strong AML policies as well, the anti-money laundering policies. So earlier the companies, they had to list in India first, and then we know that you could use the ADR or the GDR to list overseas. So the American Depository Receipt or the Global Depository Receipt, and you could issue those things and raise money from foreign investors. You could list outside of India, but right now it will not be needed anymore, because you can directly go ahead and list into those foreign stock markets. Now the Indian bourses, they are going to compete with the foreign ones if the firms are choosing to list abroad. So this means that the Indian stock exchanges, indirectly their competition has increased, because now the Indian companies will be having more options, and these things are done because right now we need funds, right? We have a fund crunch, and that is why these things were allowed by the government of India. And the private companies, this is also something very important. important that if a private company has listed non-convertible debentures, then this private company will not be termed as a listed company. So this is also something that is important to note, and they have just put these kinds of things in place. So just remember all of these things. Let us move to item number 10. And before we do that, just remember that Olive Board's current affairs capsules, they will help you to understand all of the things that you need to know for SEBI Grade A 2020 examination. You can check the link in the description and in the comments, and you can get to those. You can also attempt the free mini mock test that they are offering. And of course, if you need a full course on the SEBI Grade A 2020, then you can get access to study notes, to live classes, to videos on each and every topic, and mock tests, and all the things you need to get success in SEBI Grade A. So you can go to the link in the description and check out the SEBI Grade A 2020 course by Olive Board. So now let's get back to number 10. NFRA begins its audit of DHFL. So what is NFRA? It is the National Financial Reporting Authority, the NFRA, and they have started the audit of DHFL, the Diwan Housing Finance Corporation Limited, and it will be updating SEBI on its transaction audit. Now remember that this DHFL fiasco, DHFL had actually defaulted on its bond payments, and there was a lot of activity regarding DHFL after the ILFS collapse, and this happened mostly in 2019. And after all of those things happened, in November 2019, RBI had superseded the DHFL board after they had defaulted on the bond payments, and DHFL was the first NBFC or the first HFC, Housing Finance Company, to be referred to NCLT, the National Company Law Tribunal. So remember these things about the DHFL case, because these things might be asked in any examination. Let's move to number 11. SEBI permitted 3 types of mutual funds to make additional investments in government bonds. So this is also very important, and this was happening because of this Franklin fiasco that happened, and the redemptions have gone up. So companies actually need to meet those redemption pressures, and that is why SEBI has allowed these AMCs, asset management companies, to invest additional 15% of assets under management of corporate bond, banking and PSU and credit risk funds in government securities and treasury bills for 3 months. So remember very well which were these 3 things: corporate bonds, banking and PSU, and also credit risk funds. So 3 types of funds they have allowed, and it will of course ease the redemption pressure, as I told you, because right now there has been a lot of redemption pressure in the mutual fund industry. And just note that the credit risk fund, so in the credit risk fund, actually 65% you need to invest in the bonds which are rated below AA+, and now you can do it only 50%. So 15% leeway has been given. The remaining 15% you can invest in Government of India bonds. And similarly, in corporate bonds, 80% was required in AA+, in AA+ bonds, but right now you can do 65% in AA+, and the next 15% you can go ahead and invest into the government bonds. And these things, see, government bonds, they are the most liquid, right? So you can easily redeem those things. So any kind of redemption pressure, you are not going to be bothered if you have a lot of investments in Government of India bonds. And also the third one, banking and PSU funds. So they used to invest 80% in bank and PSU debt, but now they can do 65% there, and the rest 15% they can invest into Government of India bonds. So that is the change that SEBI has actually permitted. Let's move to number 12. To help Franklin investors, SEBI allows mutual funds to list schemes being wound up. Very, very important. Now, the units of the scheme which are going to be wound up can be listed on the stock exchanges, and investors can exit using it. This is a game changer and a very important development in the stock markets. And also in the future, all schemes that are proposed to wind up will be allowed to list. So all those schemes will be listed. And now understand this, that the upside is the money won't be blocked, but the downside is significant haircut. So it's sometimes very confusing to just think about this, that why they are going on with that listing, because who will be willing to buy this? There are many institutional investors who are willing to buy these bonds. Now understand that if you are an investor, if your money has been stuck with this Franklin mutual funds, the 6 funds that were closed, so if your money is stuck right now, so what is your option? You only have the option of waiting, right? You can wait until the money comes, the bondholders they pay, and then you get back your money. But now,
because of this listing thing, what you can do, you can list your units on the stock market, and some institutional investors can come and they can buy those units, and then you can just be rid of those kinds of problems. But remember, if you are doing these things, of course there will be a haircut, so you are not going to get the amount that you actually had, but this will actually relieve you from any kind of pressures, because you are always thinking about whether you are going to get your money back and when you are going to get your money back. So let the institutional investors think about that, and you can just be clear of all of those worries. So this is a decision that the unit holders will have to make, and SEBI that is why has given these kinds of things for them to decide. Number 13 now, SEBI asks listed companies to tell investors about a business impact of the pandemic. So till now, SEBI had not told them explicitly to talk about the pandemic and what can happen to their business because of it. So now it has been done, and the listed companies, they need to evaluate and disclose impact on capital and financial resources, profitability, liquidity, supply chain, demand for products and services, etc. that may impact the balance sheet of the company, like banks and NBFCs did. So banks and NBFCs, they have already done this, and right now SEBI they have told the listed companies to do it as well. And in fact, after they have told this, so many listed companies, they have come out and they have actually told the investors about the business impact, and this is all done for full transparency in the Indian capital markets. And the assessment of the future impact on the business due to lockdown is needed too. So because of this pandemic, what is going to be the future impact on your business? That is something that you also need to disclose, so that your investors will be knowing all about these kinds of things. So let's go to the next item. SEBI considering steps to reduce redemption risks in mutual funds. So this is also very important, but right now this has not happened. So this is under proposal, and I'm sure that in due course it will be accepted. So right now a single investor isn't allowed to hold greater than 25% of a fund's corpus. So that is the limit, and a minimum of 20 investors is required so that a fund can be run. So these things are currently actually in place, but SEBI, they are mulling to increase number of investors to 50 and individual threshold to 10 to 15%. So they are just going to reduce this from 25% to 10 to 15%, because understand this, that if you have a huge mutual fund and 25% is only with one person, suddenly if this person wants to redeem everything, then from where you are going to give the money to that person? And that is why they are trying to reduce this thing. So what will it reduce? Think about it. It will reduce the concentration risk. So remember that. And sometimes the asset management companies themselves, they will be putting a threshold, like the ICICI credit risk fund. So they don't allow an investor to invest more than 50 crore rupees. So this is also something that the AMCs right now are practicing. It's a good practice. It is not something mandatory, but SEBI will make it mandatory very soon. So let's move to number 15. SEBI penalizes NHAI, the National Highway Authority of India, for delay in filing financial results. Very important. SEBI has imposed a penalty of 7 lakh rupees on the National Highways Authority of India for delay in disclosing financial results. The delay ranged from 4 days to 78 days during financial year 16 to financial year 2019. And the SEBI LODR regulations, the listing obligations and disclosure requirements, they mandate that disclosures will be made within 45 days of the end of the year. But remember that recently SEBI has actually increased these things, and they have given some relaxation. We have already talked about that. So because of this, within 45 days of the end of the year, you need to just put the results, the financial results, you have to file it. And since NHAI had not done it, that is why they were penalized. Let's move to number 16. FSDC meeting chaired by Finance Minister to discuss how to revive the Indian economy. So what is the FSDC? It is the Financial Stability and Development Council. It's very important that you know about this organization. So the meeting, it was joined via video conference by the RBI Governor, the Chairman of SEBI, the Chairman of IRDI, the Chairman of the PFRDA, the Pension Fund Regulatory Development Authority, etc. So all of the different kinds of financial sector regulators, they will be meeting together, and it will be chaired by the Finance Minister, who is the main chair of this FSDC, and they will be discussing all the kinds of things that are going on in the economy. So after this pandemic started, this was the first meeting that they had actually done. And just remember these things, that the FSDC, it was created in 2010 then after the Rajan committee recommended it in 2008, and it is an apex body of regulators but not a statutory body. So there is no act, no statutory act that actually determines its existence. So it is apex body but not a statutory one. Let's move to number 17. Deutsche Bank approved by SEBI to offer custodial services for silver. So this is very important. Deutsche Bank has received approval to offer custodial services for silver bullion contracts. It had already received license for custodial services in gold, oil and natural gas and index futures. So these things were already received, and now they have received it for silver. Just note that a custodian is mandatory to allow institutional participation in commodity derivatives. So the institutions, when they want to participate in the commodity derivatives, they must use the services of a custodian, and now Deutsche Bank can be that bank which will offer those custodial services. Let's move to the final article for today. It is SEBI warns TCS, the Tata Consultancy Services, for inadequate investor disclosure in Epic Systems case. This is a very important development that actually happened in 2016, I think. So US software firm Epic Systems, they had filed a lawsuit against TCS for IP theft, so the intellectual property theft, and Epic had won a jury award of $940 million, which was later lowered to $420 million. So that was the final figure, and litigation was going on. So SEBI has wrapped TCS because it did not adequately disclose the details before its 2016 financial results. This is very important. They had not disclosed the details before the results, and after the results came out, they had actually disclosed. So this was something that they had done wrongly in 2016, and right now SEBI has warned TCS for that event. And this goes against, again, SEBI's 2015 LODR regulations, the listing obligations and disclosure requirements. So these things, that is why SEBI has actually just told TCS that you must keep these things in mind. I hope that you learned something from this video and that it was beneficial to you. If you enjoyed this video, please leave a like and share it with your friends, and do not forget to subscribe to this channel to get more of these kinds of content, and click on the bell icon so that you, my friend, do not miss any future update. The current affairs series will continue, and I'll see you in the next video. Bye bye.